Welcome to the bookkeeping module. So in this video, we are going to talk all things bookkeeping. So we are going to go through the purpose of bookkeeping, keeping things clean in your operations from a bookkeeping point of view, analyzing your operations, once again, from the book's point of view, the difference between profit and cash flow in a business. We're going to talk about the difference between cash and accrual accounting, the importance of reports. This is probably one of the things that most people in the painting business specifically, but most businesses are just not that clear on their reporting, so it's harder to make decisions in the business. Setting up your QuickBooks online. I'll just really quickly walk you through that part. What is the chart of accounts when it comes to bookkeeping? So how everything gets filed in the books. And I'm going to do a bit of a demo where I'm just going to do some bookkeeping and show you how I go about it and how I file everything, and ultimately how you can take all the information from the bookkeeping and you can upload it into your financial tracker in Excel, your business plan, and then do your end of year financials. So let's get started. This video is for franchisees, general managers, and I guess the company bookkeeper as well. But the people that use this stuff is the franchisee and the general manager. So purpose of bookkeeping is to create a record of financial transactions that can be summarized for various uses. Good bookkeeping allows you to see the financial health of the business and know your numbers so that you can make good company decisions and utilize your free cash flow effectively. So it is knowing what is getting spent on what, when, and how much money is available for either reinvesting into the company or investing in anything, really, anything outside the company as well, or paying dividends, just knowing where the money is in the business. So understanding and managing how cash moves through a company is critical to financial success. Surprisingly, though, very few businesses, especially in the home service industry, prepare a cash flow projection. This makes it hard to plan for new equipment, purchases, marketing campaigns, financial investments, loans, debt requirements. And yeah, I think that the biggest mistake with financials is just not tracking the actual cash flow of the business. So it's like when you don't have that level of certainty about where the money is and what is coming in on budget and what is not on budget, it's really hard to have confidence to make decisions quickly in business. Making cash flow projections is a priority, and it'll help you immensely in your day-to-day operations as well as long-term planning. So such as things like getting financing, you need to know all this stuff if you ever go and get new financing for new trucks or other expansions in the business. This reason, it's also important to be realistic as well as keep track of things as you go along. So making your cash flow plans conservative so that you actually can hit these goals. So not going overboard on your estimates that sales will double and your customers will pay within 15 days, and all the reasons, being really conservative about how you make the financial plan and what's actually going to happen. So from an operating perspective, we want to begin first by keeping all our accounts separate. So in my business, in my painting business, I only have one debit card and a credit card. And all the other things are charge accounts, like with the paint suppliers and stuff. And we just want to keep everything really clean. And I don't like to use any cash in my business at all. So not using cash within the business for anything. That way it's really easy to see where everything came from. And it makes identifying all the transactions and capturing relevant information about these transactions easier, which you'll see this when I do the actual some bookkeeping and actually start filing things. When you use cash, you can't see what the actual expense or revenue was. So all inflows and outflows, whether cash or accrual accounting, is logged into the bookkeeping system based on the chart of accounts, which we're going to cover a little bit later. So this section is all about knowing how money moves through the business holistically and how accounts and different cards are distributed between the roles within the business, right? So maybe the general manager has the company credit card and he's the only one who has it. So we know that every expense on this particular credit card is from that person. And then from a coaching perspective, it's just easy to see what has been spent and when from what person. No ambiguity. So In terms of analyzing your operations, the reason why we want to be doing this and we want to be on top of it every month, as well as for the actual day-to-day operations making decisions. But if we have really clean records from year to year, we can actually go back and see how things used to be in past years. Eventually you'll have years of information, and you can see how all the data changes over time, and the percentages spent on labor changes over time, and the percentage spent on marketing changes over time. And you can't do any of that if you're not actually keeping track of these things. And just from a business point of view, as you become a bigger business person, you have to grow your tracking acumen. So it's very difficult or impossible to analyze all aspects of your operations if you don't do this. So we want to know the past records, understand the current and future trends in sales, marketing, production, administration, human resourcing, financing, capital equipment requirements. Once you have this information, you can prepare reasonable projections in sales, marketing, all of that stuff, and ultimately be profitable and know what you need to do or shift in order to be profitable on a monthly, quarterly, and annual basis. So when it comes to cash flow, we have to consider all the movements of funds for each line item in your business. So literally all the different things, whether it's equipment purchases, marketing purchases, like the breakdown of different marketing things that you spend money on. And we don't want to be confusing them as we look at our cash flow statements. We want it to be consistent. So the difference between profit and cash flow is this. Profit is the net overall amount of money left over after expenses have been paid out. So at the end of the year, is there more money than when you started the year? Cash flow is the actual flow of money in and out of the business as it moves throughout each day. So I could spend $300 today, and then I sell $700, but $0 cash flows into the company because that $700 hasn't arrived. I've made the sale, but I haven't collected the money. Or maybe they've paid it on credit card, and the credit card is going to be deposited in 2 or 3 days, but the cash flow of $700 hasn't actually arrived into the account, but the sale has been made and taken. So that would be the way to look at cash flow. I'm more of a cash flow person. I like to really track how the movement of money into the account. From an accounting point of view, accrual and cash are the two ways that you can account for. You can do your accounting. So cash is when the books are kept on a cash basis. No income or expenses entered into the journals until cash is actually received or paid out. This is the one that I gravitate towards. I don't think it's the most common, though. What is more common is accrual. So when this is the actual basis. I'll just read it. When the accrual basis is used, income from a sale or other income-producing asset or transaction is entered as soon as the transaction takes place, even though the cash may not be collected until a future date. So kind of like the example I just used. In accrual accounting, expenses are recorded when they are incurred, even though payment not be made until a later date. It's simply a matter of preferences. At any time, you can change the method when you print your financial statements. Like I said, I think that, I like the cash basis. There is no actual right answer here. You're best to actually have a chat with your accountant about this. The accrual accounting is clearly reflects the income from a year. So even if I sell $500,000 or I produce $500,000 of revenue, and then I don't actually collect it all in that same year, I'd still report that I made $500,000 of revenue in that year. It also makes it a little bit more clean on how to allowing you to match your expenses with your revenue. And it's also just a little more clear for tracking month-to-month profitability. These are some of the benefits of accrual accounting. But once again, this is just a breakdown of what the difference is between the two. You have to kind of chat with your accountant to decide what's best for you, how you guys actually want to look at these statements and reports. So the importance of reports. Reports are the main reason for the time, trouble, and cost of bookkeeping. So the reason to do any of it. Accounting reports provide the information that the managers need for decision making, and they should be reviewed monthly or even weekly. The only way you can really know how financially successful you are is by receiving accurate financial statements to increase the accuracy of these reports. So here's some of the other reasons why reports are important. They're good for reconciling your bank accounts, credit cards, vendor accounts. Keep your expenses current by entering all the invoices and paying bills in a timely fashion. You can enter expenses in the proper period. When you pay bills, date the payment for the month that the expenses were incurred. So once again, this is ways to make sure you have accurate reports. And then just matching your expenses to your income whenever possible, right? So I want to know, there's tools that I'm not going to get into in this video, but like when I'm spending money on paint, you always want to put a job name because I want to know that those expenses are tailored to that revenue, right? And vice versa, when a revenue comes into the account, I want to know which customer that's from. So then when I'm doing my books or my job cost cards, I can see this job was $10,000, $2,300 was spent on paint and materials, or whatever it is, $1,200, and yeah, you get the accuracy in your books and in your job cost cards. So we need to get our QuickBooks Online set up right from the start to ensure that everything is tracked right from the beginning. So right when you incorporate a business, you want to have this up and going. So basically your account starts with $0 in it, and then typically there's a cash injection. Say it's $5,000 that the owner is depositing into the account as a cash injection, and everything is tracked right from the beginning, which is much easier than trying to fix it later. Best practice with bookkeeping and accounts is to ensure that you don't, between personal and business, especially if you're a legally incorporated business, is to have absolutely exclusivity. No personal things are being done through the business unless they qualify. But once again, that's a chat for your accountant of what you can and can't write off. So for setting up QuickBooks Online, you're going to have to purchase it and then create your company. In order to do this, you're going to need the following. You're going to need your business registration number. So this is stuff that you'd have done to incorporate your business ahead of time. So in Canada, it's the 15-digit business number. Your legal business name, the type of business, whether it's an S Corp or just a limited liability company. And then you're going to have to select the fiscal year ending. So when is, from a business point of view, what is the start and end of your year? I usually like to align things with the calendar year as much as possible, or even make it the exact same. And you'll want to refine the chart of accounts. So I'm obviously, in this video, the chart of accounts, I'm going to tell you what it is, and I'm going to give you the best chart of accounts method to use for a painting company than what we use at Colorcraft, so that everything is consistently reported the same way every month and it's easy to track. So what is the chart of accounts? In short, it's an organizational tool that provides a digestible breakdown of all the financial transactions that a company conducted during a specific accounting period, broken down into subcategories. Having a standard makes reading your QuickBooks statements readable and relevant when compared with future and past performance. By using a consistent chart of accounts, you accurately compare financial information and work to improve your performance. So here's an example of a chart of accounts. All right, so chart of accounts for Colorcraft. This is how I have it broken down. So we got at the top, we have our revenue. So we have residential revenue, commercial revenue, mural revenue. We do murals, and interest income. These are different ways we make money. From the cost of goods sold, these are the different cost of goods sold we have in our business. Labor, wages, benefits, WCB, bonus. So basically our labor expense, paint and materials, and then rental expenses. So these are things that vary directly with our revenue. So how we categorize these, so for revenue, the way it gets categorized is into income. That would be the categorization of these revenue streams. For cost of goods sold, if I have a labor thing that comes in, that gets categorized as a cost of goods sold. And then we go down. So for the fixed overhead of the company, the categories I'm going to have is a marketing expense. And then I've got these different types of expenses within the marketing expense. Digital, cost per click, so like Google AdWords, Facebook, search engine optimization, Google reviews, when I pay out an employee for a Google review. These are all just categorized under the expense category, and I would have a subcategory of marketing expense with each of these, so I'd be able to know how much was spent on each of those. Then I'd have another category under my expense account for vehicles, and then all the different things that go along with vehicles, insurance, sales, fuel. Then I have another category for equipment, so anything to do with rigging the vans or buying field equipment, sprayers, crew kits, that kind of stuff. Then I would have another category labeled people, so anything to do with people in the business. So there'd be subcategories for salaries for operations manager, general managers, sales representatives, recruitment and putting out ads to recruit people, training, culture events, meals and entertainment to take my team out, uniforms, right? Uniforms almost could go under marketing potentially, or it could go under people. Then I got another category for communication, so all the things that have to do with communications in the business. We have cell phones, office phones, hardware, software licenses, Gmail subscriptions, domain subscriptions, the CRM that we use subscriptions, estimating software subscriptions, and basically all these different categories. When you make your business plan, you're going to have the percentage that they should be taking up as a percentage of revenue. And as we go through the year, we're going to find out how closely we are to our original business plans, and we're going to get more and more accurate every year that we do this, and every month that we do this. In the painting business, it's very seasonal, so you can really see the seasonality of these expenses throughout the year. Then we have another category for general business expenses, things like damages, liability insurance, rent, storage rent, office supplies. Then we have financial expenses, so things like bank charges, line of credit interest, credit card merchant fees, loan interests if you had to take out a loan for any reason in the business, accounting and bookkeeping expenses, so paying for your yearly accountant and your monthly bookkeeper and your QuickBooks Online subscription fee. Then you'll have professional fees, and depending on how big your company is, you might have more ongoing legal advice given, or it might just be as simple as setting up the company at the start of the year, which is whatever, $1,500 when you're starting the company, and you have your legal and professional fees and setting up business permits and stuff like that. And then the final category that I really put in is personal development. So anything to do with improving and educating yourself for any reason, really. These are all things that I call business expenses, and I write them off. So if you're taking courses, you're buying books that are to improve yourself, you as the entrepreneur want to be writing all this stuff off because it's ultimately an investment into your business when you improve yourself. So that's legally allowed. You can actually write all this stuff off. So let's actually get into some QuickBooks and just start doing some bookkeeping, and gives you a better idea of how this all works out and comes in. Oh, well, actually, here's just a quick summary of how it would look. Revenue, cost of goods sold, fixed overhead expenses, and then these are all the subcategories for expenses in the business. And then you end up with the net profit at the bottom, or net loss if you didn't make money. And that will determine your tax expense, which is the final expense at the end of the year. So if you haven't signed up a QuickBooks account, you're just going to go into Google and type in QuickBooks Online. Just click on that one, and very simple, just make an account. So buy now. You'll probably pick the essential plan. Look at that, $4 a month to start. What a deal. For the first 3 months, I guess. 3 months you're saving, you're only paying $4. Then it goes up to about $40 a month, or $28 a month, or whatever it is. So you'll just click on that, and then it'll just prompt you and you can set up your account. Boom, you just type in your email. And you go ahead and you just do it. I've already got an account though, so we're just gonna go into my account and start doing some bookkeeping. So in my case, I just go to QuickBooks and log in. And that is going to take me here. So in here, there's kind of two main things we're going to cover. Your bookkeeper will either do all this for you, or if you're wanting to do your bookkeeping yourself, that's totally your call. That's why I'm doing this video. But there's a lot of different parts to this. The main things we're going to cover in this video about bookkeeping, if you do plan on doing any of it yourself, is, but more importantly, just so you can see how things flow. So we got our banking stuff, and we have our reports. So the bookkeeping we do is in here, banking. And then everything we do in this section to put everything's in, like allocate everything into our charts of account, then we can, once we're done doing that, we go to the reports and it'll show us what, how we did. So in this case, I've got two cards going. I've got the checking account here. So this is my checking account. And then I have one MasterCard in the business. So our general manager has the MasterCard. I've got a checking account. You can have more MasterCards on the same, or just credit cards on the same exact account. And you can actually separate that in your banking so that each credit card is specific to a person, so you can see how much they've spent. In this case, we've got the two cards, and you'll link these. The way you get them in there is you just link the accounts. So if I wanted to link another card, I just click link account, and it would ask me for another credit card or another whatever, right? And I can put it in and it'll find it, and then it'll add all the transactions up to as far back as I need to go. So I think 6 months is as far as it'll let me go. That's why it's important to start this right from the beginning. So I can see here that there's 461 transactions that have not been uploaded to the chart of accounts and into the reports. And then for the MasterCard, there's 149. So we're just going to go through some of them and, yeah, start putting them in the right places. So because it's all done, nothing's done through cash, it'll just capture it all on its own from the online banking and tell you where it came from. So bill, this is from Sherwin-Williams, so it's a painting expense, paint and supplies. So I can click here, and I can see the categories. So there's my chart of accounts categories. So this one is a cost of goods sold, paint and materials. And the supplier is Sherwin-Williams, so that's kind of the sub of it. This is taxable, so I am paying tax on it. So you can push, you click what if you want GST to be deducted, so that it's not, you don't want in your reports an extra 5% to be on the expense. You want that taken off because it's not actually part of the expense. That's it's written off. So that looks good. So I'm just going to add it. If let's go down all the way here, and let's go to one of these other pages. If there's something that's unrecognized, so for instance, this one right here, it's unrecognized. It was a check. So I can see that it was check 43. So I actually have my checkbook here. I can actually pull that up and see what check 43 was. So I'm pulling it up. So check 43, that was a labor expense. So labor doesn't have a GST. And I'm going to go to cost of labor right there. And we'll just call that payroll. So that's that's part of payroll. And I will classify that as a labor expense into payroll. So all these, Elevon is our credit card processor. So that would be an income, and it would be a residential painting income. So if we go back to once again, you can see it's a residential revenue. That's an income. So I'm going to go ahead and I'm going to add it. And then once you add something and make it the correct way, the actual QuickBooks will actually save the way that you added it. And yeah, for future, it'll know. So these are all, it can see it's made a rule that now it knows what to add. So I'm just going to go and I can add these all kind of very quickly. So if processing 100 transactions doesn't actually take very long once it's saved all the information for how things come into the business. It's basically learning as you go. So 7,000, there's $9,000. So these are all obviously final payments for painting projects that I did. So $9,000 came in. This is a check for obviously just bigger jobs. So all these mobile checks. So these are credit card processing checks, things that came in, and these are mobile checks that came in, or just checks that have come in. So those are really the only two ways that money gets collected in the business. It's check and credit card, and sometimes you'll see e-transfers, in which case it'll tell you. So these are all residential painting incomes. So I'm just going to keep uploading all these. So what are some more? Graphic impressions. So this one, it's not recognizing it, but graphic impressions, they are that's a marketing expense. So marketing, they do the wraps for the company. So that's a marketing expense, and then on a sub level, that is a vehicle wrap. So they do our vehicle wraps. And they are not exempt. We pay 5%, there's a 5% write-off. So set tax code for this category. So that's there. It's asking me if I want to make a rule. I'm going to say yes. And then now I add it. And now from now on, whenever something comes in from graphic impressions, boom, now they're going to allocate it properly. So it's a marketing expense for vehicle wraps. And the supplier is graphic impressions. So I can just add that now. And that's pretty much what bookkeeping is. We're just looking at all the stuff and putting it into the right chart of accounts. And we just keep doing that. So I'll do another one here. So Tim Hortons. So maybe I bought a coffee for myself or for one of the employees, one of my guys. Or maybe I want to do an interview, right? So what is this? We're going to call this people. This is a people expense. That's the main category. And then the subcategory, I would say, is meals and entertainment. And there is a write-off of 5% on that. And if you want to even put more details, memo there, you can. And I would, but you don't need to. This is pretty specific. Right? I could say recruit or interview conducted. So say I actually knew what it was, I would just write in what it is. And then I add it. So now it'll recognize anytime something comes in from there. Tim Hortons, that's what it should be. Right, what else we got here? Where's some more? So Dollarama. So that looks like a supply expense. So that would be materials most likely. Something that I bought from the dollar store. I would call that a... There, I'd call that a cost of goods sold, supplies and materials, and I'd call that supplies. And we add it. So I'm going to continue on and just go through all this stuff and continue doing that, and then we'll look at some reports, how everything has been allocated, and that's when you can actually start to do analysis of your performance in your operations. All right, so 20 minutes later, I have done all the transactions. So if you go to the checking account now, you can see that all of that is done. So this account is all set. So we go to the MasterCard, and I've done most of the MasterCard stuff. I got a few left, so we'll just kind of clear those out. So here we have an uncategorized one. So this is from Chevron. So this is a vehicle expense. That's the main category, the vehicles. And it's a sales van gas expense from Chevron. So we'll add that. Then we got Rogers bill. So that's communications is the main category. Subcategory is phone. We can add that for $123. Equipment and Home Depot. So we'll add that. Communications is the head category, the main chart of accounts, and the subcategory is CRM. So that's Job Nimbus. That's our CRM system, our customer relationship management system. That'd be communications. Financial and administration is the core chart of accounts, and then the subcategory is the bookkeeping, which is QuickBooks, which is what we're using. We can add that. This is Benjamin Moore, so a supplies expense. $29 is the monthly banking fee, so that'd be under the banking category, subcharge, bank charge. Right here is a credit card payment. So this is actually it's just a match. So it's matching what it has, I guess a transfer from the checking account that's come in to the account to pay off a bill. So match. And here is a professional development expense. So it's a training that I've registered for. So that go under the professional development heading. So self-improvement stuff, which is a write-off. Now that everything is cleared from both accounts, then you go to, you do that once a month. So your accountant, or sorry, not your accountant, your bookkeeper, or if you want, you can do it yourself the way that I just did it. When you're a smaller business, maybe under about $500,000, you can do it yourself if you know how, and it takes about half an hour a month. Or your bookkeeper would do this for you. Once everything's cleared, so all the transactions for the months have been gone through, so maybe it's 140 transactions or something. Once they're all categorized though and saved, it's really quick. Now I would just go to my reports. So I click here and I'll be able to see how I did for the month. So these are the favorite reports. The one we're interested in is the profit and loss. So when we click on that, it takes us to our profit and loss statement. So this took me to the profit and loss statement for the year so far, so starting January until October 14th, which is where we are right now. So this is the first year in business for Colorcraft, the first full year. Right now there's a total of $388,000 in income so far. There's some coaching revenue, a little bit of refunds, and yeah, that's revenue. We come down here, we got the cost of labor, which is the cost of goods sold or a variable expense, $170,000. Supplies and material is $32,000. We get our gross profit, which is after cost of goods sold, $184,000. And then here's all the various charts of accounts that we have listed and that we've been categorizing by. And if you actually click into each of these, there'll be the more deeper breakdown. So we have a total profit for the business so far for the year of $90,000, and we're in October, so we'll probably end up just over $100,000 in profit. And you can kind of click into these, and at this point I would actually, if you're at the year end, I'd actually go into these and I'd double check to make sure everything has been categorized correctly. So like say marketing here, you can click into that and it'll give you all of the stuff. So SEO, AdWords, cold calling, flyer delivery, lawn signs, and you can see all the different breakdowns and how they were sent, e-transfers, checks, stuff like that. And if anything looks like it's out of alignment or it's like been miscategorized, you can actually click into it. So say this one's wrong, clothing, or say I wanted to classify this clothing expense as a people expense, and it was put in there by accident just because when you were clicking through. You can click it and you can change the chart of account where you want it. So say I wanted to put it into people. There you go. It was an e-transfer, GST. It's a clothing expense. I can save and close that, and that will disappear from this one and go into the next report, or the one that I allocated to, which was the people category. So here's people. I can click into that and see how this one's broken down. So for people, it's like meals and entertainment expenses, recruitment expenses, Craigslist, it's like you can see the suppliers. So Craigslist and whatever, wherever I'm shopping. So meals and entertainment, these are different cafes where I took people out for breakfast. Where's the expense I just had? It was put in here. There it is. So I'll put that back, clothing. So I'll click into that and I can just put it back to where I want it, what category. So we wanted that to be a marketing. So that's why we'd make the chart of accounts, is so that we're classifying things correctly. And from year to year, it's always the same classification. So we have accurate numbers and a system so that we can compare things from one year to the next and see how we're doing. So I'll save and close that and it'll get recategorized. So yeah, that's kind of the basic breakdown. If anything looks high, I'll click into it and I'll figure out what's going on. Vehicles, well, that's a really big number, 31,000. Why is that so high? That's because it's supposed to be, really. These are lease vehicles and finance vehicles, but we got lots of sales van gas. We have leases. We have GPS trackers. We have insurance. So really, you're paying off these vans. So it's kind of a, you know, it's a lot of money to spend on vehicles, but you're actually paying off these assets, which you can then amortize and depreciate. So nothing looks out of alignment here. And the best way to actually check things, another good way to check things to see how you're doing overall, is if you go back to your original report. We clicked on the profit and loss here, but if you go to profit and loss as a percentage of total income, it gives you a much better understanding of how much is being spent. So total income is 100%. My gross profit is 47%, which is actually quite a little bit high. Actually, no, sorry, that's actually really good. Gross profit's good. So total cost of goods sold is 52. We're usually looking to get a gross profit of about 50%. So I'm 3% over. Selling expense, 1%. I did a lot of sales this year, that's why. So usually you have a selling expense of more like 9%, commissions to your salesperson. Marketing is at 4%, which is a little low. Maybe you usually want that around 6%. What else? Credit card is 1.65%, which is very healthy. In vehicles, just under 10%. That'll go down over time as you pay off your vehicles. And then profit is 23%, which is a very realistic and healthy profit margin for a painting company. Usually I'm looking for a profit of about, 15% to 25%. So this is even a bit high, which means I probably could have spent a little bit more on marketing, or maybe, whatever. But maybe I probably would have made more sales if I did that. Yeah. So that's kind of how that breaks down. And then what you're really doing at the end of each month is, so we'll actually go back to that, and you can actually just do it at the end of every month, and it should take you about, you or your bookkeeper, whoever's doing it, about 20 minutes a month to just check, to put all the transactions in. Once they are saved, it's really easy to do, and then just check out your report and see how you're doing and share the results with your team or whoever's in management. So if I want to go to, let's say, May, let's do May 1st until May 30th. May 31st, I mean. So run the report. 64,000 revenue, 47% labor, which is a little high. It's because we use subcontractors. Supplies and material, 8%, which is a little low. Overall gross profit is 44%, which is reasonable, maybe a slight couple percentage low. And then all this looks fine. Must have returned some equipment. Maybe that's what happened here. Purchased equipment that we didn't need. Marketing, so a little bit low maybe. And yeah, profits 30%, which is pretty normal for May, which is a big month, and it's one of your first months. And from a cash flow point of view, it's because we're doing cash accounting. So yeah, that all looks pretty good to me. So then that's the results for my month, and nothing looks out of alignment. And if there is, I can make if there's something that looks weird, we can make decisions based on how we've done for the month. And I would compare this against my business plan cash flow statement, which is in the Excel business planner. So that's really it. This is not a crazy comprehensive video about bookkeeping, but it is an overview of how I do it. It's usually about 20 minutes a month. put everything in, like log everything into the chart as accounts, and then I just review the statement and see how it is, how I did. And yeah, so we'll end with just how to close the books for the year. So the end of the year financials, we want to perform an end of the year procedure or end of the period procedure. So these are the preliminary steps for preparing the accounting reports and financial statements at the end of every period. So you do this at the end of the month, like I said, and then reviewing your statements monthly is just to stay on top of your profitability and goals for the year. So before the accounting can be prepared, we have to do our bookkeeping and bring the accounts and the business up to date, reconcile the accounts, and complete the whole bookkeeping process, which I just showed you how to do. At the end of the year, you will do that same cycle with the bigger overview. So you'll kind of get the whole year statement, P&L statement, which we went through. And I would kind of comb through each line item and just make sure there's nothing that's been allocated to the wrong chart of accounts. And just make sure everything looks like it's been classified correctly. And we just bring the books to a fiscal year end and getting things ready for the bookkeeping process to come to an end. So in many cases, you'll use a calendar year for your ending. That's what I do. But you can also have a fiscal year end really anyway, anytime that you and your accountant decide. So when is the start of the year and when is the end of the year? And yeah, all the rest of the details, your accountant will let you know what he needs. And the better you do this bookkeeping process, or the better your bookkeeper does this good bookkeeping process, the cheaper your accounting bill is going to be, ultimately. So what is the role of a good bookkeeper? In the most simple terms possible, bookkeepers make sure that the books are reconciled and that every bill is paid and every single invoice is sent out and followed up on in a timely manner. So being willing to track down every tiny detail and not forget any task is the core soft skill for bookkeepers. So it is keeping your financials in check. That is the end of this training, and we'll see you in the next one.